From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. It's great to have your company. My name is Kyle Rod. I'm with Danny Akiye, and well, it's New Year's Eve, financial New Year, of course.
Exactly, and we're not having a party today, but tomorrow this is last call, so that could be our end of financial year little AusBiz party.
Indeed, that's a good idea. We'll have to make sure everyone listening in or watching in will have to make sure that they watch that tomorrow. But in the meantime, the market down a fraction when it comes to the COB 200. And you were saying before too, Danny, the ASX 200 down maybe just a sliver as well.
Absolutely. Currently, well, barely down 3 points I've got, so pretty much flat. But we have to wait about 15 minutes to get the final close in terms of what's been happening. But gee, that data, it took all the sales out of the market, didn't they? The sales just disappeared.
Yeah, absolutely. Well, that might take us to our three themes nicely, actually, because, well, we're closing in on New Year's Eve, of course, but well, tech-led, have to say that too. We actually had the tech sector up by 2%. So,
absolutely.
Some interesting moves there. But yeah, a resilient economy. I think that was really what drove the market today. You saw, especially in the Australian dollar, but also the ASX 200, when did things start going south? Well, it was after that stronger than expected jobs data, which we'll get to actually just in a second, because we've got a few charts to accompany that story. But as I mentioned before, let's get to the sectors we were watching. It was a tech, well, I was going to say led rally. It didn't rally, but it was a day that saw the outperformance in the tech sector. And yeah, some of those familiar names doing reasonably well. Actually, Wisetech not far from a 2% rally, which is our stock of the day. We'll get to that in a moment as well. Oh,
interesting. Yeah, it must be heading, it's almost up to its all-time highs again. So yeah, interesting though, isn't it? The more the data is, bad from the perspective of, maybe rates have to stay, higher for longer, the more tech goes up.
Yeah, well, we've got that strong tech theme in the United States. It seems to be bleeding through here as well.
Absolutely.
So we'll keep an eye on that. But certainly, if you were heavily weighted to tech, and a lot of people are, because they're in love with that sort of growth story that comes with a lot of tech names, well, you probably haven't done too badly this year. As you can see, there's a couple of real sort of high-flying names certainly recovered off the lows of last year. But let's get to the REITs, which were not an area of the market that performed well today.
Oh, that's interesting. Mine's showing a few more greens than what's up there, but I will keep my mouth firmly shut.
Yeah, interesting. Okay. Well, it's across the board a little bit sluggish. We can see Dexus, Mirvac, Charter Hall. There were a lot of those companies going ex-dividend today.
Correct.
They were amongst that kind of huge deluge of ex-div that we did get today. That didn't seem to have too much of an impact on the market on our aggregate, but certainly some of those names are found in the real estate sector. Utilities as well, worth mentioning. Also a little bit mixed. Meridian and Origin higher, but APA Group lower. AGL a fraction lower too. And I just wanted to look at metals and mining in particular. If we can get that up, and yeah, we can see there that, well,
profit taking. Yeah,
a little bit of that. Still sort of, I guess, some disappointment from maybe the reversal of that China trade or the stimulus trade that set a rocket under the market there briefly, but that's certainly, well, stopped being such a big story today. I had a few commodity chats actually about maybe the bearish outlook, especially for iron, or if there's not sort of more assertive policy from China's central government.
Apparently they're going to have their big meeting at the end of July about the first half of the year and what to do. And I was just speaking to a strategist from London, and he expects that you will see some moves from Beijing, but nothing like what we saw in 2008.
Yes, what a shame. So can't bank on that necessarily to bail out our market or our economy if things get, well, a little bit nasty towards the end of the year. But, well, for the time being, the data is anything but when it comes to the Australian economy. Retail sales up by 0.7%. Now, of course, as we've become accustomed to when it comes to talking about this data, that this is, well, a nominal figure. It doesn't take into consideration, or doesn't reveal volumes. That comes with the quarterly print. So we don't really know if people are buying more or less stuff than they were perhaps a month ago. But we do know that, well, thanks to perhaps consumers taking advantage of some promotional activities in May, that the number was higher than expected.
Absolutely. Pull through. Remember we were talking about all those promotional sales, all those emails coming into the inbox.
Yeah.
Well, looks like the consumers have really jumped onto that one and a pull through in earnings. If that's the case, one mightn't be surprised to actually see things, slow down again because, everyone's filled their boots from the sales.
Yeah, indeed. So maybe we'll see. No.
No, neither did I, but there you go.
I don't think they register sales at secondhand shops and those figures, to be honest. I prefer my stuff from Vinnie's. But anyway, also very strong data today on the job vacancy front. Did drop 2% from the prior read. However, still remains very elevated, as you can see there on your screen. Basically 200,000 more job openings now than there were pre-pandemic. So still points to a fairly tight labour market, and naturally we'll keep an eye on wage growth figures and then obviously inflation numbers as they come through to see whether that's putting upward pressure on wages and therefore also prices as well.
Absolutely.
Yeah.
Yep. Still elevated. It's really interesting because I know in the US there is labour hoarding, but at the moment we haven't got any indication of that, have we? Because I was listening to the ABS, and when you were chatting with him, it was very interesting, saying that hours worked is really holding up. It's even going up, if anything.
Yeah.
That's unlike the US, because hours work there is starting to come down.
Yeah, their labour market is so different structurally from ours, especially when you look at the participation rate. There's that sort of long secular trend that just still didn't get reversed. In fact, it was probably exacerbated in the US labour market. People haven't come back in again. Well, people haven't come back, but it's just sort of extended this kind of trend that was going on for a better part of a decade. Whereas, in Australia, our participation rate remains at extraordinary highs, and we're probably still suffering from labour shortages, but perhaps for different reasons than the United States. So, I guess it's devil's in the detail, but it's fascinating. And nevertheless, I was talking to Warren Hogan today, actually, who was fairly concerned.
Quite negative.
Just a little bit.
Yeah, talking rates going up to international levels. That would absolutely scare the bejesus out of a lot of mortgage holders.
Yeah, that's just code for 5%, basically.
Yeah, code for 5%. I mean, that should have alarm bells ringing everywhere.
Also, I don't like to entertain the thought, to be honest. I'll have to, move out of Sydney, that's for sure. It's probably too expensive up here. But let's just get to the stock of the day now, because while it was Wisetech Global, one of those high-flying tech names, at least this year, and Michael Gable from Fairmont Equities, as well as Mark Morland from Team Invest, was with David Koch to give us their views on Wisetech.
As they add a new client, each one is more profitable than the last because their cost price is fixed.
Right.
And what they are doing, which I think is really impressive, is they've clearly become global market leader in the whole international freight, demurrage, and all the documentation. It's all super complicated, and all the countries all have different tax rates and so on. And they have picked up, I think, 5. I haven't looked at it for a while, but like 5 of the biggest international freight forwarders and so on as clients. But in those cases, like I think FedEx is one of them, they implement their Wisetech program progressively by country. So they've got this massive runway of clients that are actually basically going, we're buying your system, but it's going to take us a decade to implement it because it's such a big deal.
In the past, you've just mentioned the short selling. There's been concerns that organic growth hasn't, a lot of people are looking at all the acquisitions and saying they're just growing by acquisition, but they've proven that they have been able to grow organically as well. And when they bolt on these new businesses, as Mark mentioned, they've got a fairly flat cost base. So they're even moving now into landside logistics as well, using their expertise there. The addressable market is still huge in front of them, and I know people used to say that a lot a couple of years ago with tech companies. This is the addressable market, and this is where these guys are. But Wisetech has proven to actually, be able to expand into that addressable market. So, all I'll add is the chart. Obviously, I look at charts. You can't beat that uptrend. It's as good as an uptrend as you'll get. So it's definitely a hold.
Okay, so that was, well, positive, but well, we have seen that run up obviously in prices. So,
yeah, so a bit hard to justify, isn't it, when it's run up so hard?
Yes, but if you're, well, in it, as Michael was just saying, perhaps it's a hold. And I mean, I know you like Wisetech, if I'm not mistaken.
I hold it.
Yeah, I mean, is it sort of...
I bought it again. I sold it it had great results, and I sold it at 46, and then watched it move off into the distance, and then it got sold off at 50, and I came back in again. So
yeah, right. Is there a reason why you like Wisetech? Because we have a few good tech stocks on the ASX,
we've got great
right?
tech stocks, if you want to call them tech stocks, yeah.
Yeah, I suppose they fit into that basket. We'll put them in that basket for now. I mean, is Wisetech, your preference of the tech stocks locally, or is your favourite?
No, not necessarily. I think the scope to have a few of them in there. I think the interesting thing about Australia is that we're famous for, homes and holes and, doing all of that. But at the value-added scale, we're actually very, very good at it. So it's capturing those companies like CSL. So I don't think you necessarily... This is not advice, folks. I don't think you need to necessarily just have one. I mean, why not have... a few, because there's some really good companies in there.
Yeah, definitely.
Yeah, I mean, I think it's more about when you decide to add to your position in these stocks. And as we've seen this time around, Technology One hasn't looked backwards, has it? It's kept going. Xero has really surprised to the upside. I know a lot of people sold that after the result. I actually added some more to that one. So, if they've got the proven track record and the good management, and something like Wisetech, which is in a very... You can see there's potential disruption with their CargoWise software and everything that they're doing there. He seems to be able to put the runs on the board, so you're effectively backing management.
Yeah, okay, interesting. And I suppose, we talk about, house and holes, and, at the index level, it looks like we're sort of underperforming versus the rest of the world. But, you can weight your portfolio, obviously, towards some of these names and, maybe get that kind of alpha there by doing it.
Exactly.
By doing that. But, well, that's a little bit of a chatter there on Wisetech. Let's look at the leaders and laggards, shall we? So looking at the leaders to start with, a fairly mixed
uranium.
bunch. Was there much of a story there today?
Yeah, you were talking to Rudy about that Shaw and Partners uranium stock, and I just think it's really interesting. I mean, I'm not a uranium bug, but I actually do think it is quite interesting that the market continues to move higher there. I mean, the amount of money that's flowing into the energy transition is massive, and it's just interesting that uranium still is figuring so prominently because the lead times are so long there. So that one continuing to roll. Yeah,
actually, I was having a chat with someone at the gym on the weekend, and they're in mergers and acquisitions at one of the big investment banks in Sydney, and they're in the sustainable energy team, and said, well, he was feeling a little bit he's quite pessimistic on the transition to renewables, on the basis that, because obviously there's the time it takes to implement any kind of policy or create any kind of infrastructure, but the way that there's all this kind of inertia from regulation as well as sort of social license issues is that it's kind of getting away from us, the issue, a little bit. So we take sort of 3 steps forward, but the problem is accelerating at 4 steps, 5 steps, 6 steps quicker than we can we can't catch up. So his whole notion, I sort of said tongue in cheek, so like, well, I've got a buddy who says uranium's the way, and he said, I tend to think that maybe, even though we have these long lead times in terms of, infrastructure investment, that, maybe it'll have to play a part in the energy mix in the future.
Quite likely.
He also said that, there might be an unfortunate and very unpalatable reopening of a lot of coal power stations at some point because, again, the transition's not moving quick enough. So,
it's interesting because you look at China and they're going gangbusters there. Although they've got problems, what I think is really interesting, and we're really going off course here, but they've got terrible droughts in China, and they have a lot of hydro, and they're having to ration power. Same things happening in Vietnam, and that's when you look at Australia and we're doing all these hydro schemes and these big dams, etc. But it seems in a climate challenged world intuitively that relying totally on renewables is going to be challenged. For example, if the winds are actually too strong for the wind turbines, and rain forecasts, by the way, in the US have not been altered for all the infrastructure spending that they're actually doing. So I would just refer to a guy called James Lovelock, Professor James Lovelock, who wrote a book called Gaia, and some would call him a greenie, but at the end of the day, he said the only way that we're going to solve the problem is by putting nuclear power plants in rainforests. You keep the rainforests, which are really important for cooling the earth, and you get energy supply, and no one will go in there and log the rainforest because they're not going to want to get zapped by a meltdown of the
that power line under the earth.
And I know it sounds a bit silly, but there is actually logic in there. It's, you know, but we have gone off course, and let's go back to maybe some of the stocks.
Yeah, okay.
Yeah.
We'll go to the laggards. We'll see if there's anything there that we can pick apart.
Bigger downgrades.
Yes, still.
Collins Food, maybe some profit taking after that great run.
Yes, possibly. And again, a few of those names there too would be a victim of, well, lack of a better phrase, of obviously the ex-dividend, probably, I would say. Distribution for the REITs, of course. So yeah, but bigger, down about 14-15% in the last 2 days. So a little bit of well, pain there for shareholders. Small cap leaders and laggards, of course. Let's see if we can get across them. Nothing that really stands out to me there. But Next Science, if you're in it, up 20%. So that's the big winner of the day, I guess you could say. And the laggards also, well, perhaps nothing that I can sort of see that's
360.
360 Capital.
Yeah. Oh, Capital. Yes, not Life 360.
Not Life 360.
Whoop, brain fail.
No, that's right.
I often see these things where we live of this poor pet that's been lost, and I feel like saying we need to tell the owners to discover Life 360, and they get their little.
You know what? You could be like some, you know, new age superhero, and you can just walk around with the app, just latch it to the animal, and you can just map it yourself. And then, you know, when they're found, you'll know, and, you know, not all heroes wear capes. It'll give you something to do on the weekends. All right, well, just think about it.
I love animals, but maybe that's stretching it just a bit far. I might be not the tragic cat lady, the tragic dog chasing lady. That would be quite bizarre.
The crazy cat lady of Redfern. Yeah, sorry, shouldn't say too much. Anyway, let's go on to what's on overnight, shall we? There is a fair bit of data, and we've got US earnings season. I would say kicking off tonight, because every time I see Nike, that's when I get the sinking feeling.
I know, I keep thinking of you because they were talking about it today, the Nike earnings and what's happening around the world, including China. So you're right.
That's the first meaningful set of numbers that I feel comes out of US earnings season. So that'll be this evening, and you just touched on all the important themes there, of course. Final GDP, I should say, that's out of the United States. Yep. Not such a big deal because we always get the advanced, the prelim, although it is expected to be downgraded slightly. And unemployment claims will be interesting because we are waiting to see those tick higher. Well, if monetary policy is doing what it says it's supposed to be doing. Tomorrow, a little less news on, it has to be said, but some PMIs out of China, manufacturing and non-manufacturing, and also Tokyo core CPI, which has had the habit of moving markets at the margins over the last few months. Yeah,
absolutely. And of course, it is the final trading day of the financial year.
I know, where does this time go?
And the last call.
And the last call.
We've got a great lineup for the last call tomorrow.
We do. I'll try and rattle the names off, but it's at this stage of the afternoon, I'll probably miss someone and I'll feel terrible. But it is the last call tomorrow, 3:30. So as we like to say around here, or as our dear leader does say quite often, grab a beer, grab a wine, sit down, you'll be able to watch that, get some expert analysis for an hour there. But in the meantime, obviously we don't want to preempt things too much. It's going to be a big final day of the financial year tomorrow. You can catch up on all the news and interviews on our website and app in the meantime. But Danny, we'll call it a day?
Call it a day.
All right, have a great night.